Hey, it's Tax Quips time from TaxMama.com. Today, TaxMama wishes you a Happy New Year and brings you some basics about how the Trump tax plan will affect this filing season. Well, happy 2018! 2017 ended with quite a bit of turmoil as Congress scrambled to pass a sweeping new law. It's massive, increasing the size of the United States Internal Revenue Code by several 100,000 more words. Too big to handle here. In fact, enough to fill a book, which as it happens, I am in the process of writing. My publisher, Humanix, hopes to release it by the end of next month, so stand by. Meanwhile, the good news is very little in the Tax Cuts and Jobs Act, or TCJA for short, affects your 2017 tax returns. Here are a few things that do affect 2017. First of all, charitable contributions. You absolutely must have a receipt for all donations of $250 or more to any organizations. You must have it in your hot little hands before you file your tax return. In the past, in some instances, if the organization filed a report showing that you paid them, the IRS would let it slide. No longer. So chase after those receipts immediately. Medical expenses. Good news here. You can reduce your medical expenses by only 7.5% of your adjusted gross income. Why only? Because this year, everyone, including seniors, were on track to reduce our medical expenses by 10% of AGI. For a tax return with an AGI of $50,000, that increases your potential medical deductions by $1,250. Aircraft transportation fees. While this doesn't affect everyone, I know some people who own aircraft. So when aircraft owners turn their aircraft over to a management company to lease out for them, they no longer have to pay the federal transportation tax when they use their own aircraft. This affects all flights made after December 22, 2017. The IRS decided owners had to pay these fees as well as people who leased the aircraft way back in 2012. Naturally, there are a lot of things that will affect you for 2018. Don't worry, I will be posting articles about the changes over the next couple of weeks. One major 2018 issue that really needs to change is the loss of the deduction for casualty and theft losses. For instance, if you have a fire in your home, or if someone steals your identity and wipes out your bank accounts, or you fall for a Ponzi scheme. None of that is deductible any longer. This is definitely one of those deductions you want to put pressure on Congress to restore. You can reach your legislatures here using TaxMama's special call to action contact list. Incidentally, there are many provisions that have been part of the tax law in the past that expired for 2016 or 2017. Congress normally extends them. They didn't do that in the TCJA. However, there is a tax extender bill proposed by Senator Orrin Hatch. Nothing's happening to it yet, but if passed, it will restore several expired tax breaks, including relief from cancellation of debt income on foreclosed homes. In the meantime, if you want to see the effect on your taxes, MarketWatch has a nifty calculator for you to play with. Just scroll down and enter your numbers. I know, it doesn't look like a tool, just part of the article, but trust me, it works. To make comments and tell us how the Trump tax plan affects you, please drop into the Tax Quips forum. And remember, you can find answers to all kinds of questions about the Tax Cuts and Jobs Act and other tax and business issues free. Where else? At TaxMama.com.